There's been another major silver transaction in the mining sector. SilverCrest Metals is set to be acquired by Coeur Mining for $1.7 billion to create what they're calling a leading global silver company. The deal follows another major transaction last month, which saw First Majestic agree to acquire Gatos Silver for $970 million. Let's dive in. Coeur Mining has agreed to acquire SilverCrest in an all-stock transaction valued at $1.7 billion. SilverCrest shareholders are set to receive 1.6 shares of Coeur for every share they hold, which translates to consideration of about $11.34 at the time of announcement. The figure represents an 18% premium to the 20-day moving average of SilverCrest, which is in line with recent premiums offered to other silver takeouts. The transaction will bring together Coeur's Rochester mine in Nevada and its Palmero mine in Mexico with SilverCrest's Las Chispas mine. On a combined basis, the company is expected to produce 21 million silver ounces in 2025, along with 432,000 gold ounces, for total silver equivalent production of about 55 million ounces. From a financial perspective, the deal makes sense for Coeur shareholders. SilverCrest, despite being in production for a short period of time, is entirely debt-free and is churning out free cash flow. In 2023, the company produced a free cash flow of $121 million while producing 10.4 million ounces of silver equivalent at an all-in sustaining cost of $12.58 per ounce. More recently, last quarter saw free cash flow of $24 million, while its all-in sustaining costs came in at $16.88 per ounce. Treasury assets, meanwhile, total somewhere in the neighborhood of $122 million, which is made up of $98 million in cash and $24 million in bullion. On a combined basis, Coeur is expected to churn out $350 million in free cash flow in 2025, along with EBITDA of $700 million. But in saying that, Coeur's free cash flow in 2023 came in at negative $297 million, while EBITDA was just $60 million. And year to date in 2024, free cash flow has been negative $94 million, while EBITDA is just $77 million, which doesn't exactly inspire confidence that the guidance can be hit, even with the addition of SilverCrest. SilverCrest's treasury position and free cash flow profile, meanwhile, will result in an immediate reduction to Coeur's leverage ratio, which is expected to drop by 40%. So let's take a peek at the SilverCrest asset. SilverCrest is a single asset producer, with all production coming from their Las Chispas mine, which entered production in November of 2022. For 2024, the mine expects to churn out somewhere between 10 and 10.3 million silver equivalent ounces at an all-in sustaining cost between $14.90 and $15.75 per ounce. The operation currently mines roughly 1,100 tons per day of material, while the processing plant on site is averaging 1,200 tons per day, with average grades of 765 grams per ton silver equivalent and a recovery rate in the ballpark of 98.4%. Now, this is all well and good, but when the mine was first put into production, it had an estimated mine life of roughly 8 years, meaning we're about 25% the way through that already. The mine life is based on proven and probable reserves of about 3.4 million tons, and as of August 2023, had a net present value of $550 million based on $1,800 gold and $23 silver. To add to that short mine life, the 2023 technical report actually reduced tonnage in the project's mineral resource estimate, while veins were coming in narrower than previously believed. And stock work is also less continuous. It should also be noted that the head grade is expected to decline for the next several years until it gets a slight bump in 2028 and 2029 based on current projections. On the flip side of things, free cash flow was projected to average $84 million a year from the mine at much lower metals prices. And to be fair to SilverCrest, they've committed up to $14 million for exploration in 2024 alone in an attempt to add ounces to their reserves. So the big question is, how does the market like it? Now, at the time of writing, SilverCrest shares have gone up over $1 or 11% to sit at $10.32 a share, which is short of the original stated consideration price of $11.34 a share. But after you consider that Coeur shares have fallen by 8%, which has taken them down to about $6.50 a share, we then can use the exchange ratio to say, okay, well, what's the value that SilverCrest is getting after the 8% drop? And that works out to $10.41 a share, which is basically where the price of SilverCrest is sitting at today. The shareholder response has been mostly positive, which is kind of a rarity these days. Mark IKN indicated that he felt that the price was way too cheap, but it's still a win-win. The Silver Baron and Maley seem to agree with Mark's sentiment. While Yucks, like us, is a bit of a skeptic on the free cash flow claims for the combined company. And newsletter writer Fred Hickey is just bummed he needs to find an alternative he likes as much as he liked SilverCrest. So let's wrap it up. Was this a good deal for SilverCrest shareholders? Like anything, that depends on when you got in. If you were invested this time last year, you more than doubled your money. If you invested 2 years ago, well, then the return might not be as great. But what I do know is that this is good for the junior mining sector as a whole. Last month, we saw Gatos Silver acquired. This month, it was SilverCrest. Well, I don't know who's next. What I do know is that the signal's there that we're starting to see a bit of life in the market and that majors are looking to expand their stake in silver. And eventually, that's going to start trickling down to your juniors. As someone that's well positioned among a number of silver names, that excites me. All right, everybody, let me know what you think of the transaction. Were you a shareholder of either company? Are you long silver? You think that we are in the early stages of this bull run, or do you think that we are in the late stages and it's time to get out? All right, everybody, thanks for watching.